Hey y'all, Lisa Davis here, and I want to talk about Rick Scott down in Florida and how he's pushing HUD to foreclose on your homes, especially in this economy. Let's talk about it. Let's talk about it. The one problem that I have a big problem with people that frame a lie as the truth. And I have a big problem with people that try to act like they're helping when really they're harming. I just don't like it. So let's look at what Rick Scott is up to down there up in Florida. Let's go look at what he's up to down in Florida. Um, so where is the let's see. No, not that. That's so old. I'm going to show you the letter that he wrote. Here, first I'll start with this. So this says that Senator Rick Scott sounds the alarm. This came out April 3rd, and this is actually on his page. This is his press release that he sounds the alarm to HUD Secretary on Biden era housing policies, setting taxpayers and borrowers up for failure. So today, Senator Rick Scott sent a letter to the Housing and Urban Development Secretary Scott Turner, thanking him for his work with the Trump administration to support American families and reverse harmful Biden era policies. Now, this made me pull out. Before we do that, let's go look at the Project 2025, right? So when you go look at the Project 2025 and you look under the Department of Housing and Urban Development on page 508, right? This is the Department of Housing and Urban Development, what their priorities are going to be. It was written by Ben Carson, penned by Ben Carson, and on page 508, one of the agenda items, just one little simple. You see that little highlighted place? One little thing. It says the new secretary should initiate a HUD task force consisting of politically appointed personnel to identify and reverse all actions taken by the Biden administration to advance progressive ideology. It don't even say, I've never seen any policy like that before. It just says, we need a task force to reverse everything Biden did. No rhyme or reason. No, was it right or wrong? Let's just reverse everything. Okay, so let's go back to what Rick Scott said, right? So, because it's late, I wouldn't even be on. So, Senator Rick Scott also sounds the alarm on a concerning situation involving mortgages insured under Biden's federal housing administration that left low-income homeowners in a dangerous debt spiral, leading to a rate of delinquency unseen since the peak of 2008 housing crisis. Not true. Not true. And another thing that's not true is that the housing crisis did due diligence and analysis to find that everybody that had the largest majority of people that had first payment default in the housing crisis was not low income people. It was people that had purchased their homes directly through subprime lending or traditional conventional lending. The people that went through low income, meaning that they had to go through housing counselor, the housing counseling services, they got a HUD mortgage product, did not default, and they also got down payment assistance, and they had a low down payment. These were not the first payment defaulters. It was the people that were going out after the quick money, the subprime money, the easy money, the no income, no asset, the stated loan, the no interest, no income, no interest, zero interest up front. It was all the people going for the innovative type lending. It was not low income people, because they found that the counseling that people had to go through and the education that people had to go through that was required by HUD helped them to understand how to stay in their homes. So this is the way it started off is just not true. Okay, so let's look at the letter. I'm not going to read that whole stupid article. Let's just go look at the letter that he wrote, because the letter pissed me off, right? So I gotta stop smacking like that. Hold on. I think this is the letter. Did this come up as the letter? Can you guys see that? Okay, so this is the letter Senator Scott wrote to HUD. So April 2nd, dear Secretary Turner, I would first like to thank you for your work with the Trump administration to support families and provide a safety net when they need it most. Within the first 2 months of your service as Secretary to the Department of Housing and Urban Development, we have already seen great results as you and your team work to unwind harmful Biden-era housing policies. I grew up in public housing and I know firsthand the value of your efforts. I'm gonna have to go research that. Throughout the 4 years of the Biden-Harris administration, we saw how their reckless decisions made life harder for American families. Inflation was up over 20%. I love how they use everything to talk about something besides why they're really writing. Like inflation was not up over 20%. That period of time, interest rates were sky high, and Americans' dreams of home ownership were put at risk as they struggled to put food on the table. I am so grateful to have President Trump back in the White House working diligently alongside you and other members of his administration to find solutions to the problems President Biden created and to ensure the federal government works better for families across the nation. I write today to bring your attention to recent highlighting a serious by the FHA, Federal Housing Administration, bomb market fueled by lack of standards and disaster policies that's so untrue. First, underwriting guidelines through FHA have not changed. The book for underwriting guidelines, HUDuser.gov, HUD user, and you could find they removed them. I had to call, I was under to find out where the underwriting are, but changed. HUD have not changed under the Biden administration. They have, of course, had to bring them up to more modern and more current with all the changes that's going on with maybe whatever. But the guidelines have not changed at all. And so the Biden-Harris administration stuff, a ticking time bomb. Many of the bills in the those lending up to the 2000. No, it's not. 2008, I was a lender Biden and didn't know. In 2008, that mortgage bubble happened because of prime lending, which was created by Wall Street. Where it came from, it didn't come from. It didn't come from. It came from Wall Street. It came from hedge funds, some type lenders. And I wish I could remember the names. It was like birds. I gotta remember those old hedge. Anyways, last year, nearly 2/3 of all borrowed mortgages were insured by the FHA had a debt-to-income ratio greater than 43, which was necessary to get into home with some as high as a 57% interest rate. Is an exception if they have disposable income and other compensating factors. See, this is just not, anyways, a level of debt that to be able to absorb expected expenses. Not true. As reflected in or allowing heavily debted burdened borrowers to take on more for these mortgages and high delinquencies within the first 12 months after issuance. Again, now we have done analysis on this, and low income and go through our delinquent. They're not the ones that foreclose. They're not the first payment default. This is a lie. It just be rambling stuff. Ordinary defaults will lead to foreclosure. Harris administration. See, this is where he's lying. Dangerous and short-sighted economic policies. The FHA announced the implementation of the payment supplement loss mitigation option. Absolutely, they created a payment supplement loss mitigation to make sure that if people were not able to make their payment, they would supplement it. Let's talk about that. We're going to talk about it. This policy allowed the agency to pay mortgage services the value of a borrower's missed payments to bring the mortgage current, while also paying the servicer to reduce the monthly mortgage payments for delinquent borrowers at 25% for a 3-year period. No, that's not how this happened. And that's not what that means. That's not how that, okay, we're going to look at it. Both the value of the missed mortgage payments and the reduced amount of the monthly payment going forward are added to the principal balance owed on the original mortgage. This only delayed and worsened the consequences. First of all, where is your data? Rep Scott, you're such a liar. How many people have foreclosed because, okay, let's finish this. This only delayed and worsened the consequences for homeowners by increasing the overall size of the mortgage, driving the borrower deeper into debt, and leading to mortgages that exceed the value of the home itself. 100% not true. 100% not true. And over the last 4 years, you have not found borrowers whose houses have been negatively appreciated. And now the value of the home is more than and now they owe more in their home than the value of their home when housing was appreciating because the sales market was strong and they did not lose their home. This is not true. Where is the proof? Where is your data? You are a liar. The Biden-Harris administration insured risky mortgages. That is what HUD does. HUD was created to approve riskier mortgages that conventional lenders couldn't approve, that standard conventional lenders would not approve. People could come in and buy a house conventionally, 20% down, no mortgage insurance, have excellent credit, get the lowest rate, get a nice house mortgage payment. And people in low income that are first-time home buyers that didn't have 20% put down, but still wanted to qualify for a great rate. That's why they created FHA. They're not necessarily riskier. FHA didn't have any credit score requirements. FHA did not make it so stringent to get into the mortgages. This is the purpose of FHA mortgage, of a HUD FHA mortgage. Yes, they're more risky than conventional, but you got to have both products because you're going to have first-time home buyers that's not making a lot of money, and you're going to have your savvy buyers that are millionaires that can put 20% down on a $500,000 home and get a good rate and a good mortgage. In doing so, the Biden-Harris administration set tens of thousands of borrowers up for failure. Show me how they failed. This is why he's a liar. Stop talking about it, be about it. Show me the foreclosures. Because for real, we haven't been having foreclosures like we had during the mortgage meltdown, and definitely not throughout COVID. And we have not had a ton of mortgage foreclosures. Ugh. Owning a home is part of the American dream and a worthy goal for so many Americans. The Biden administration made that dream nearly impossible by fueling inflation, driving high interest rates, and adopting reckless policies. Interest rates were high because when Trump was in office during the pandemic, he cut interest rates to zero. When he cut interest rates to zero and he did the TARP or the ARPA, or what was it? The giving people all that money, people had a surplus of money, rates were very low, inflation increased because people were spending and spending and spending. They were getting money from the government and they had low interest rates where people were buying houses like crazy and lending and lending and lending until it got to a bubble, until we had to raise the rates to slow all that down. All that went into effect because of Trump. Biden inherited that. Immediate action is needed to address the growing subprime No, there's no subprime mortgage bubble, and ensure the financial solvency of FHA insurance fraud fund from which the payment supplement amounts are drawn. Okay, returning to fiscally prudent underwriting standards for the new FHA-backed mortgages is a good step to prevent this problem from worsening, but undoing the damage caused by the Biden administration payment supplement program will be a delicate but necessary task. Let's look at what they're proposing. So wait, okay, I got to get you guys from here. I got to get you off of there. So let's look at what they're proposing. So, well, no, let's look at what Biden did. Let's do that first. So Biden did, where is the one? This is what the Biden administration put into place. This was the new payment supplement loss mitigation home retention solution. Created February 21st, 2024. They wanted it to be implemented immediately, but at least by January 1st, 2025, right? The payment, I'm going to start right here. The payment supplement allows servicers to bring the borrower's mortgage current and well, let's start up here. Today, the Federal Housing Administration published this new mortgage letter, right? It's a mortgagee letter. This is how they put in new rules and policy or whatever. It's called a mortgagee letter. The mortgagee letter establishes FHA new payment supplement loss mitigation home retention solution designed to help additional borrowers avoid foreclosure and retain their homes when other FHA home retention options are unable to generate a sustainable monthly mortgage payment reduction. This is important. We learned how to do payment reductions during the mortgage crisis, and we learned how to modify mortgages or forbearance or whatever with mortgages. But sometimes those processes might not work, or people might not qualify for them the correct way or whatever. If it's not as big of a the rules were made during the mortgage meltdown, so I don't know if they've been modified or not. So if you're in jeopardy of facing foreclosure, but you're not in jeopardy as like the jeopardy was during the mortgage meltdown, then you might not meet all the requirements, whatever. So they created this. The payment supplement allows servicers to bring the borrower's mortgage. A servicer is somebody that just collects the payment. After you make a mortgage and you buy your house and you buy it from, let's say, Chase Bank, if Chase doesn't want to be the one to collect all the payments for the next 30 years, they will hire a servicer, meaning that the servicer gets paid to collect your payments. They don't really hire them. They sell it to the servicer. The servicer takes care of it, make sure you make your payments and apply them to the mortgage. Blah. Right? So the payment supplement allows servicers to bring the borrower's mortgage current and temporarily reduce the principal portion of their monthly mortgage payment for a term of 3 years without modifying the mortgage. The reason that's important is because a modification is a re-underwrite with a new mortgage note, and you got to notarize everything, and you get like new terms and limits, you get new rates and terms. You have to redo the note, redo the mortgage note and the note, and refile and re-record, right? It's a process. This says if there's a problem and we notice somebody's getting behind on their mortgage payment, we'll allow the servicer to bring the mortgage current, temporarily reduce the principal portion of their monthly mortgage payment, meaning a mortgage payment has, like if you pay $1,000 a month, $200 is your principal, $800 is the interest. For the first 15 years, interest is the largest portion of your mortgage payment, right? And then after that, it's the amortization switches, and now the largest portion is your principal. What this means is that if you have a mortgage payment for $1,000, the first 15 years, $200 might go to your mortgage principal, however much you owe. If you bought it for $200,000 and your mortgage payment is $1,000, $200 of your mortgage payment will go to reduce the principal, how much you owe, and the $800 is the interest or the finance charges that the bank collects for lending you the money. That's how finance is applied. They get their money back up front, right? So what this is saying is that if they find that you're in trouble of making your mortgage payment, they will reduce the principal portion of the mortgage payment, not the whole mortgage payment. They will reduce the principal portion of the mortgage payment, meaning that the bank that lended you the money is still going to get their money back, because they're still going to be able to collect their interest and finance charges because they are still getting their portion of the mortgage payment. So you can reduce the principal part to zero, still collect a payment as a servicer, and apply that to the bank that lent you the money and still be on time for your mortgage payment. However, reducing the mortgage payment significantly while paying the bank back for a term of 3 years. For a term of 3 years without modifying the mortgage. That means your note don't change. We don't got to sign no new paperwork. You don't get a new rate and term. None of that. They gave the power to the servicer, which makes 100% sense because you don't have to go through all these hoops and stuff, right? Red tape. So when implemented, the payment supplement will be a permanent addition to FHA's loss mitigation tools and will be incorporated into future revisions of the FHA loss mitigation waterfall. The policy takes into consideration feedback by stakeholders on the draft of the mortgagee letters and disclosures that were posted on single-family drafting tables as announced by FHA. Info from 2023. Okay. FHA is also announcing. Okay. So that's what it does. And the other thing that it does is it puts the difference on the back side. It's in here somewhere. Is it not in here? I read that it was in here somewhere. It reduces the principal portion of the mortgage payment for a term of 3 years without modifying the mortgage and the payment. The payment supplement is only repaid when the borrower sells or refinances the home or the mortgage is otherwise extinguished, meaning that if they reduce the amount that you pay monthly, they put all that to the arrears. They just put it to the arrears, right? And only payable upon time of a sale or a refinance or otherwise extinguishes the mortgage, however that may be, right? However that may be. They do this for 3 years. They give you 3 years to get yourself together. without having to modify. 3 years. Now, here's what these people want to do. So he's complaining about this. This is horrible. This shouldn't be done. The Biden era should have never did this. This is terrible for people. Okay, so this is what they propose. They want to take that away. This is the problem I have with these people. They want to take this away, and instead they want to put in, is this it? Nope, that's not it. Hold on, let me find it. Slide screen. Where did I find it at? FHA. I have it here. No. Oh, that's right. Foreclosure relief. This is what they're proposing. No, this is what they're offering. And this is why it's crazy, because they could offer both. But instead, when was the date on this? I don't even know. The new HUD website sucks, right? Today, the Department of Housing and Urban Development, Secretary Scott Turner announced that Federal Housing Administration, this is the one for borrowers recovering from hurricanes and moratoriums. Is this the one this is for the extension? This is to help people that just suffered a hurricane. Wrong one. Unless I can find it on here. Nope. Let me go to another one, the other one I had. God bless. Child. What is this man talking about? Nope, that's not it. Nope. Nope. HUD extends foreclosure relief. Hold up. Now I know I had it. Because what they want to replace a 3-year solution with is utterly ridiculous. Don't tell me I can't find it. No, this is about how they redid the website. Existing foreclosure moratorium. Oh yeah, this is it. I'm sorry. That is it. Wait. That was it. That was it. Where is that? Where is that? You said, "Oh my gosh, not Senator Scott." And look, I never heard of him. I was just going through all the stuff just to see where these people what they was doing again. Keep trying to keep up with them, you know. Oh, it might be up here. Yeah, this is it. So instead of helping people for 3 years, it's on here that the moratoriums prohibit. Yeah, it's right here. FHA insures over 1 million single-family mortgages in the Helene and Milton PDMDAs. The moratoriums prohibit mortgage services. So what they are proposing, or what they're going to put in. Oh, it's right here in the first line. Today, the U.S. Department of Housing and Urban Development, Scott Turner, announced that the Federal Housing Administration is extending by an additional 90 days its existing foreclosure moratoriums. 90 days. They're taking away a 3-year safety net, and they're giving the American people an additional 90 days extension. They're taking away a 3-year safety net, and they're giving the American people 90 extra days of foreclosure moratorium. That is not a fix. That is not a fix. The moratoriums prohibit mortgage servicers from initiating or completing a foreclosure action. 3 months ago, people would be safe for 3 years. Now And you know why they're doing this? Because they want, I believe, they want to see people foreclose on their homes because they're going to be able to pick up homes for a little bit of nothing. Why would you take away a 3-year safety net to give people a 90-day moratorium? And you're not even reducing the payment. You're just putting it on hold. And during a moratorium, you still have interest and taxes. You still have payments you have to make. You still have payments. You have the payments are not going anywhere. They're not putting them to the back. They're not eliminating them. They're putting them on hold. So that means you still owe it. And as soon as the moratorium is over, you owe 90 days worth or 6 months worth of payments that they put on hold, plus all the interest, back pays, fees, and all those things, right? This is what they would rather do, which makes absolutely no sense. And then the one thing that I don't like that was in that letter from Scott Turner or Scott, Rick, Florida Rick, whatever his name is. The one thing that I didn't like that he talked about in his letter was that FHA loans are loans that are made to people with the American taxpayers' dollars. They lie about everything. So they said in order to eliminate fraud, abuse, and waste, and stop wasting American taxpayer dollars by making these bad mortgages for low income people that can't really afford it, because the FHA is lending people with a high debt ratio of 43% or 57%. They want to stop wasting taxpayers' money and make sure that people can afford the homes that they're buying. First of all, FHA loans are made with bank money, not taxpayer money. They get people so riled up by telling them that they're wasting their tax money on people that shouldn't get the money, where FHA does not make mortgages with taxpayer money. FHA just does that's just not how it works. We do not make mortgages using America's tax dollars. We just don't. I don't understand how these people can get to be senators and they lie. They lie the way they lie. They lie the way they lie. I think he said it on his website. So I can't. I just can't take it. I had to talk about this right now. So yeah, so Rick Scott is pushing to get your homes foreclosed faster. You can say what you want to say. That is exactly what he's doing. He took away a 3-year safety net, and instead he wants to enforce a 90-day moratorium to help people stay in their homes that may be facing foreclosure. Rick Scott sucks. Rick Scott is a liar. HUD should be ashamed of themselves. HUD was created to help low income people not only buy homes, but stay in their homes, and make sure that you work with people to stay in their homes if they have any type of payment default. So Scott Turner should be ashamed of himself. This is terrible. It's going to hurt people that need to be able to stay in their homes. It's going to hurt people that were first time home buyers, or people that had some credit blips, or that had that didn't have pristine credit. That's what a FHA mortgage is for. It's to help people buy a home at a very low interest rate, just like a conventional mortgage rate. But because they had mortgage blips, you have mortgage insurance on it that's a little bit higher than conventional mortgage insurance. That's it. That's all it's for. It doesn't make sense to me to punish people and take away a 3-year safety net by saying that it's hurting the American people by helping them to stay in their homes. What are these people going to do if they do lose their homes and they can't get better by the 90-day moratorium you give them? And then what happens after the 90-day moratorium? That's the biggest problem. We saw this problem so much, which is why when we were learning how to modify during the subprime mortgage meltdown, they would modify the homes, but then after the modification period, all those payments would come up and it would be a bulk of payments. People couldn't afford that. So they had to redo it and redo it and redo it until they figured out to put it into their arrears or to forgive. Some people had some of their equity forgiven, some of their payments forgiven. It was a lot to learn, because basically lenders were flying the plane as they were building it. Nobody had ever foreseen or ever thought that they would see millions of people at one time just stand up and say, I'm going to drop my keys back off at the bank. You could take this house. We don't want it. It was a colossal, it was a nationwide colossal stunt that just took all the banks by surprise. Because at the end of the day, the banks were not equipped to manage all these vacant properties. Banks were not equipped to go board up the properties, and the banks were not equipped to take the keys back out of the branches where all these people dropped off all these keys. They just were not, and they weren't equipped to foreclose on all those properties because they would rather have collected their money. So they started figuring out ways to help people stay in the house. And sometimes the ways worked and sometimes it didn't, but it was a learning process until they finally figured out how to do modifications. But that also had a lot of red tape to it. Reclosing, new mortgage, new terms, new rate, new years, new payment, all those things. And so this payment supplement thing that the Biden administration put in place made sense because it just modified it, reduced just the principal, kept the interest, so the bank made their money, put the rest to the arrears, and then it's only paid off as when you sell your house or you refinance, as most grants for low income people are. We have hundreds of products like that already, where people get down payment assistance, where people will get a mortgage subsidy to purchase a home, where people get a mortgage subsidy for renovations, $50,000, $100,000. These subsidies are never repaid back. They're either a soft second forgivable, or they're a soft second that sits there behind the main mortgage that gets paid off upon sale or refinance of the home. This is not a new principle. This is not a new way to do it. And so for Rick Scott to be saying that it's putting low-income homeowners in jeopardy of losing their home because now their home is not going to be worth as much as they owe is a bold-faced lie. And it just makes me mad because this is going to hurt people. So anyways, that's my rant right now. I'm going to be updating you guys on the rest of this bullshit. What I think is happening is that the tariff talk is keeping us so distracted. We're not seeing the stuff they're doing behind the scenes. So I'm looking through housing and banking and finance, digital currency. I'm looking through all this stuff now to see what's going on. The thing with the IRS that just happened today, I'm going to talk about that tomorrow because that's crazy. Social Security. So I'm going to be bringing up all this stuff. I've just been busy the last week or so. But I'm packed. So keep a lookout for me. Like, subscribe, share, get your people over here. We're going to be talking about every state that's doing people dirty and every senator that's behind it. That's what I'm about to be doing. So I'll talk to you later. My name is Lisa Davis. I am the Trusted Banker. Hope y'all have a good night. Bye.